you can just live a dual existence. I mean, you save in Bitcoin, and then anytime you need to make a payment in fiat, you just convert your Bitcoin to fiat and pay it, and that's that. And anytime you get some fiat in terms of your paycheck or excess money that you want to save, you convert it into Bitcoin and you save. So, I mean, that's obviously what's going on with a lot of people today, and that's fine. But the medium of exchange piece, in my opinion, is going to be very real. It's going to grow, and it will ultimately lead to full replacement of the dollar, but probably more quickly.
Lepard highlights the current utility of Bitcoin as a store of value, especially in an inflationary environment. He emphasizes that the store of value use case is Bitcoin's strongest at the moment, especially in regions where the local currency is weak or where people lack access to traditional banking services. In such places, Bitcoin and the Lightning Network are being adopted bottom-up, driven by necessity rather than choice. Lepard envisions a future where Satoshis, the smallest unit of Bitcoin, could become the standard unit of account, potentially replacing the US dollar. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We're still in the very, very early days of this asset, and the Lightning Network is still very, very small. But I was glancing at some numbers the other night and doing some research on it, and boy, Lightning Network is growing really quickly.
Yeah, it is.
Yeah, the number of transactions, the liquidity, the channels, all of it. I mean, I think I saw a piece of data that said channel growth is like 10,000% a year. I mean, it's going up, and so look, it's got a long way to go before the Lightning Network competes with MasterCard, or Visa. Whereas we are starting, everyone feels the inflation pain, and so the store of value case is pretty. I mean, it's clearly the best use case right now for Bitcoin. Although interesting, I mean, you spend time reading Alex Gladstein's work, and you come to the conclusion that hey, there's some places where they don't have credit cards, and they're not even banked, and the local currency is shit. And they're downloading Lightning wallets and transacting in Lightning transactions. So it will bottoms up. In my opinion, it's going to occur. And I think to say that it's never going to occur and that the Satoshi is never going to be a numeraire, I take the other side of that. I think my kids will not know what a dollar is, or my grandkids certainly, and that things will be priced in Satoshis. Call it maybe 10 or 15 years. Which is a long time. I mean, that's not tomorrow.
Oh, I mean, it's literally double Bitcoin's life, right? It's only been around for 15 years.
Exactly.
So imagine when we're going to be then.
But I do think that's where we're headed. I really do, because it is, it is a better form of money from a store of value point of view. But you're right. I mean, in the interim, you can just live a dual existence. I mean, you save in Bitcoin, and then anytime you need to make a payment in fiat, you just convert your Bitcoin to fiat and pay it, and that's that. And anytime you get some fiat in terms of your paycheck or excess money that you want to save, you convert it into Bitcoin and you save. So, I mean, that's obviously what's going on with a lot of people today, and that's fine. But the medium of exchange piece, in my opinion, is going to be very real. It's going to grow, and it will ultimately lead to full replacement of the dollar. But probably more quickly than that will be, the inflation is what will lead. It's when people are getting roasted by inflation, really roasted. I mean, we saw 9% as the peak in the last cycle, which is bad. But
and that's reported.
Exactly. And
that's a reported number.
Very good point. It's much higher than that. Very good point. Look, like you were mentioning earlier, like Turkey. You're in Istanbul. I mean, they're having very high inflation. When inflation starts to get to 15, 20, 25%, 30%, which is entirely possible in my view, the next 5 years, then people start getting very serious about this and realize, okay, I cannot hold. I mean, when I get a dollar, I got to get out of it as quickly as I can. If you're 30 and you can, that you've got a long runway in front of you and a lot of earning power and so forth, if this thing goes up and down a bit, who cares, right? But if you're 60 or 70 and you put all your money into something and it has a 60% drawdown, well, that's kind of bad. I mean,
absolutely.
And so, I mean, I think older people are right to be somewhat cautious, but that doesn't mean they hold zero. And obviously, I'm glad you talked your father into it, because it is the best performing financial asset. It's going to, in my opinion, it's going to continue to be the best performing financial asset. And so, it's if you can live through the roller coaster, which, as we all know, kind of never lasts more than 4 years, then you're fine. But if you're on your deathbed and you might need the money, your heirs might need the money in a year or two. Well, you probably shouldn't have all your money in Bitcoin.
That's it.
You got to have a. So it's just a matter of. I mean, it's not a 0 or a 1. I mean, when I'm talking to my older clients, I'm like, look, I'm not asking you to put all your money into Bitcoin. I'm just saying that having 0 Bitcoin is insane because it's got more asymmetry than anything else in the world right now by a large measure. I've never seen anything this good, even at this price. And that's the funny thing I encounter, and I've orange pilled a ton of golds people, but I encounter a lot of people looking at it and they're making the mistake of fixing on older prices. Well, geez, yeah, I get it for you. You bought it at 5,000, and it's at 60,000 now. How can I pay that much? And I'm like, yeah, but you don't understand. When I was buying it at 5,000, I was looking at Max Kaiser, who bought it at 2. and you kind of just have to get comfortable with the fact that what Saylor said is correct. It is going up forever, Laura. And so, I mean, if you bought it at 60 and it goes to 600 and then it goes to 6 million, both of which I think will occur now over multiple years, you're going to be really glad you bought it at 60. So, but you've got to have patience, right? And we all know that. Those of us who are in it, know it, have studied it, etc., say that. The only Bitcoiners the only thing I think is a warning to people, and the only time I've seen people get hurt in this, and I think it's incumbent upon all the Bitcoin cheerleaders, and I'm one of them, you're one of them, we all are, we believe in it, is to fully explain to a buyer what they're buying and what it can do. Because the only time I've ever seen anybody get hurt at is when they got all excited about it, they FOMO'd into it right at a peak or near a peak, then it had a big drop, they concluded they were wrong, and they blew it out at the bottom, and that's, I mean, they did part of it right, they bought some, but they didn't do the other part right. They didn't dollar cost average down. They instead let the price convince them that they were in some way wrong, and they sold, whereas if they just hung on, as we all know, everybody who's been in it for 4 years is ahead, of their cost basis. And I think that pattern will continue. But, for an older person who's got risk, aversion, it should be an aggressive part of their portfolio that, if it goes down 60%, it's not going to change their lifestyle or scare them. And so I don't know what that means, but I mean, if you're 70 or 80, maybe it's 10% or 20% of your portfolio. I mean, that's just a guess. I mean, I think everybody's different. I know 70-year-olds who have all their money in it, but they fully understand it and they believe in it longer term. So, it's a matter of understanding what you're buying. But having been an investment professional for 40 plus years, I've seen, the first two things you should look at with respect to an investment are, what's the pattern? What has it done in the past? Because it's probably going to do that in the future to some degree. And then, what's the performance? And, the pattern in the past is it's been volatile with some big drawdowns. So, if you're buying it and the money you're using to buy it, you think to yourself, oh, if it goes down 60%, I'm going to want to shoot myself. Well, then you're buying too much, but if you buy it and you say to yourself, I know that in a 10-year time frame, it's going to be up a lot. And if it goes down 50%, I don't care, then that's the right amount to buy. And then if it does go down 50%, as you've done, I've done, others have done, you think to yourself, oh, this is great, it's on sale, and now I'm going to buy more.
Lepard emphasizes that having 0 exposure to Bitcoin is a mistake, especially given its asymmetric potential compared to other financial assets. He recounts how some investors fixate on older, lower prices of Bitcoin, thinking they've missed the boat. However, he encourages them to recognize that even at current prices, Bitcoin has the potential to grow exponentially over the long term. He echoes Michael Saylor's sentiment that Bitcoin is going up forever, and advises that those who buy now, even at higher prices, will likely be pleased with their decision in the future. One of the key warnings Lepard offers is about the importance of understanding what one is buying when investing in Bitcoin. He cautions against FOMO, fear of missing out buying during peaks, only to panic sell during downturns. Lepard stresses that the only time investors get hurt is when they fail to understand Bitcoin's long-term potential and instead react emotionally to short-term price movements. He advocates for dollar cost averaging and holding for the long term as the best strategies for success.
Yeah, I mean, it's so, the gaslighting that they're doing on us is just so disgusting. I mean, I mean, I can't remember. I've seen many of the Fed people and other people, Congress critters and stuff saying things like, these corporations are just being incredibly greedy and we're going to collect. It has nothing to do with the corporations. How about the fact that you guys grew the money supply by 40%? Actually closer to 50% if you add a couple of years together. I mean, there's your inflation right there. And you just got more money chasing the same number of goods. And so, yeah, it's a real fundamental problem that is going to get solved as we are forced into transitioning to a sound money currency, which I think we will be. I think market events are going to make this problem larger, more evident to more people. And eventually, we're going to have some kind of a crisis, and that's going to, if the crisis is bad enough, which I eventually believe it could be, people are going to demand sound money because they're going to realize that, living in an inflationary world is just hellish. I mean, it's, you work your entire life to save money. I mean, I'm writing a book, and I've got a lot of anecdotes in there, but one of the biggest ones was that in 2008, when the GFC hit, at the time in the United States, you could earn a 5 or 6% yield on a CD, which is a bank certificate of deposit, relatively short-term, relatively safe, right? In some cases, I think guaranteed. And, the GFC comes along and Bernanke puts in ZIRP, which stands for zero interest rate policy. Bingo, rates go to zero, CDs go to zero. And people would work their entire lives to maybe save $500,000 or $1 million or whatever. And they were living off of the interest that they were getting from their CDs. They couldn't do it anymore. It just went away. And, they're in the 70s or 80s. It's kind of tragic because it's not easy for them to go back to work. I mean, for young people, young people have the benefit of having a lot of earnings power and years ahead of them, So anyway, I digress, but the point is, it's a very, very broken system, James, as you know, and it's unfortunate. And you could get all bummed out and gloom and doom about it, but I prefer to be optimistic about it because I think that, the trends in force in society today are quickly driving us to, the end point of fiat currencies as we now know them. And I think when that occurs, inflation is too high, people are screaming at the top of their lungs, we will migrate naturally or perhaps unnaturally, it depends on how much the government fights it and gets involved, to a sound money system. Just because people will be fed up with, the inflation.
Lepard criticizes the U.S. Federal Reserve and other policymakers for their role in creating inflation by expanding the money supply. He argues that the real cause of inflation is not corporate greed, as some politicians claim, but the massive increase in money supply over 40% in a short period. This, he believes, will eventually force a transition to a sound money system, driven by a crisis that makes the flaws of the current fiat system undeniable. Lepard reflects on the plight of savers during the 2008 global financial crisis GFC, when interest rates were slashed to zero, devastating those who relied on savings for income. He contrasts this with the situation today, where inflation is eroding the value of money even further. While the current system is deeply flawed, Lepard remains optimistic that the trends in society will eventually lead to the end of fiat currencies as we know them and a return to sound money principles, likely driven by the adoption of Bitcoin. Please like and subscribe my channel.